Welcome to Joseph Markets, your premier destination for insightful finance discussions, where we decode the strategies shaping tomorrow's wealth. Today, we're unpacking a topic that's buzzing in investment circles: hedge funds and their Bitcoin strategy. If this is your first time here, smash that subscribe button and enable notifications to stay ahead with our finance breakdowns. For 100% verified news and spot-on advice like you'll find in this video, like it up, subscribe to Joseph Markets, and comment Hedge Funds BTC below. Let's spark a discussion. This video key insights on hedge funds and Bitcoin strategies. Research indicates that over half of the largest U.S. hedge funds now hold Bitcoin exposure, primarily through ETFs, signaling a shift toward institutional adoption amid regulatory clarity. However, recent market volatility has prompted some funds to pivot to cash for risk management. Strategies vary from direct holdings for long-term value storage to using derivatives for hedging, with predictions suggesting deeper integration in 2026, driven by stablecoins and tokenized assets. Growing adoption. Funds like Millennium Management, $2 billion exposure, and Point72 exemplify this trend, but not all participate, e.g., Bridgewater Associates remains cautious. Risk considerations. Bitcoin's fragility, post-2025 highs, has led to de-risking, yet institutional demand via ETFs could stabilize prices. Future outlook. Experts from Grayscale and Bitwise forecast Bitcoin hitting new highs in 2026, with ETFs absorbing supply and hedge funds benefiting from bipartisan legislation. Controversy. While some view this as mainstream validation, critics argue it centralizes Bitcoin, potentially undermining its decentralized ethos. Evidence leans toward balanced benefits for diversified portfolios. Understanding hedge fund involvement. Hedge funds are increasingly viewing Bitcoin as a portfolio diversifier, similar to gold, but with higher growth potential. According to recent reports, exposure often comes via spot ETFs for ease and regulation. Strategic approaches. Common strategies include long-term holding for inflation hedging and short-term trading via futures. Institutional tools like stablecoins are emerging for collateral. Recommendations for investors. Consider low-fee ETFs like Grayscale Bitcoin Mini Trust, 0.15% expense ratio, for indirect exposure. Always consult advisors, as volatility remains a key risk. Let's hook you in right away. What if I told you that over half of America's top hedge funds are quietly stacking Bitcoin, turning what was once a fringe asset into a core portfolio play? But with the recent market dips, some are cashing out to dodge the next crash. By the end of this 30-40-minute deep dive, you'll uncover the exact strategies these billion-dollar funds are using, backed by fresh 2026 data, and I'll reveal a hybrid approach that could safeguard your investments while capturing upside. We'll dissect real examples, pros and cons, and future predictions, so don't click away. Coming up, the shocking $2 billion exposure from one fund alone, and why 2026 could be Bitcoin's institutional breakout year. To maximize retention, I'll tease pivotal insights every few minutes. Stick around for the 9 predictions from Pantera Capital that could redefine hedge fund plays. And later, discover how AI is merging with crypto to create unbeatable strategies. Plus, for every fact, I'll cite the source so you know it's rock solid. Remember, empowering your financial decisions starts with engagement. Like, subscribe to Joseph Markets, and comment your thoughts for more tailored content. Point 1. The rise of hedge funds in Bitcoin, a historical shift. Let's begin with the big picture. Hedge funds, those elite investment vehicles managing trillions, have traditionally stuck to stocks, bonds, and commodities. But according to HedgeWeek's report on U.S. hedge fund majors investing in Bitcoin, over half of the 25 largest U.S. hedge funds now have exposure to Bitcoin, marking a seismic shift toward cryptocurrency integration. This isn't just hype. It's driven by Bitcoin's potential as a hedge against inflation and fiat devaluation. For context, these funds collectively manage assets exceeding $1 trillion, and their entry validates Bitcoin's evolution from a speculative play to a strategic asset. Expanding on this, the report highlights how the approval of spot Bitcoin ETFs in January 2024 opened the floodgates. Prior to that, regulatory hurdles like SEC restrictions made direct involvement risky. Now, with clearer guidelines from the Genius Act and rescinded SAB 121, as noted in Grayscale's 2026 Digital Asset Outlook, hedge funds can custody and trade Bitcoin without balance sheet liabilities. This has led to a surge in adoption, with institutional capital flowing vertically, per SVB's 2026 Crypto Outlook. Imagine funds that once dismissed Bitcoin as digital tulips, now allocating percentages of their portfolios. It's a testament to maturing markets. But why now? Data from Rivers Analysis, cited in the Hedge Week report, shows that Bitcoin's correlation with traditional assets has dropped, making it a true diversifier. In 2025, amid equity volatility, Bitcoin's returns outpaced many indices, drawing funds seeking alpha. However, this shift isn't uniform. Some, like Bridgewater Associates, remain sidelined, viewing it as too volatile. This controversy underscores the debate. Is Bitcoin a store of value or a high-risk gamble? Evidence from Bitwise's 2026 predictions leans toward the former, forecasting Bitcoin less volatile than Nvidia stock. Point 2. Key hedge funds leading the charge. Who's investing and how much? Diving into specifics, Millennium Management tops the list with nearly $2 billion in Bitcoin exposure, primarily through ETFs, as per Hedge Week's report. This multi-strategy giant, managing over $60 billion, sees Bitcoin as a macro hedge. Similarly, Point72 Asset Management, led by Steve Cohen, holds 1,089 Bitcoin, integrating it into their quantitative strategies. Schonfeld Strategic Advisors owns 6,734 Bitcoin, using it for arbitrage plays. Other notables include Mariner Investment Group, D.E. Shaw, Verition Fund Management, Bluecrest Capital Management, Elliott Investment Management, and Sculptor Capital Management, all dipping into Bitcoin via spot ETFs like BlackRock's iShares Bitcoin Trust, IBIT, which boasts over $70 billion in AUM according to the Motley Fool's top Bitcoin ETFs for 2026. Why ETFs? They offer liquidity and regulatory compliance without the hassles of direct custody, as explained in Grayscale's Outlook. Expanding these exposures aren't small bets. Millennium's $2 billion represents a significant allocation, signaling conviction. Per SVB's Outlook, this ties into corporate adoption trends, where Bitcoin serves as collateral. However, not all are aboard. AQR Capital Management and Balyasny Asset Management avoid it, citing leverage risks highlighted in the Federal Reserve's February 2026 Financial Stability Report, which notes high hedge fund leverage amplifying volatility. This split reflects controversy. Proponents argue Bitcoin's scarcity, only 21 million coins, drives value, while skeptics point to 2025's 50% drawdown from $126,200 highs. Point 3. Primary strategies employed by hedge funds, from holding to hedging. Hedge funds aren't just buying and holding, their Bitcoin strategies are sophisticated. According to Pantera Capital's Navigating Crypto in 2026, many use a macro view, treating Bitcoin as digital gold for portfolio diversification. Long-term holding dominates, with funds like Millennium accumulating via ETFs for steady exposure. Others employ arbitrage, exploiting price discrepancies between spot and futures markets. Per Bitwise's 10 predictions for 2026, ETFs will absorb over 100% of new Bitcoin supply, enabling funds to front-run institutional inflows. Expanding quantitative strategies are hot. D.E. Shaw uses algorithms for volatility trading, per Goldman Sachs' 2026 Hedge Fund Outlook. Privacy-focused plays like zero-knowledge proofs for secure transactions are emerging, as Pantera predicts. Perpetual contracts allow leveraged bets without expiry, ideal for high-conviction funds. However, risks abound. Bloomberg's February 2026 article notes hedge funds pivoting to cash amid Bitcoin's $66,700 trading range, cutting risk after 2025's crash. This de-risking involves selling positions to hold cash equivalents, underscoring Bitcoin's fragility. Controversy arises in centralization fears. Hedge funds' involvement could concentrate control, countering Bitcoin's ethos, yet Grayscale argues it stabilizes prices through institutional demand. Point 4. The role of Bitcoin ETFs in hedge fund portfolios, accessibility and advantages. Spot Bitcoin ETFs are game changers for hedge funds. As per the Motley Fool's 5 best Bitcoin ETFs for 2026, funds like IBIT, Europe 2.5% fee, largest AUM, and Grayscale Bitcoin Mini Trust, 0.15% fee, provide seamless exposure. Hedge funds allocate via these to avoid direct ownership hassles, per Hedge Week. Advantages include tax efficiency in IRAs and liquidity during market hours. Expanding, Bitwise predicts ETFs buying excess supply in 2026, boosting prices. Fidelity's FBTC, 0.25% fee, and RK21 shares, 0.21% fee, are favorites for their custodians. However, cons like management fees erode returns, and limited hours miss 24/7 crypto moves. Per SVB, this fits institutional vertical integration, with banks like JP Morgan accepting ETF-based collateral. Point 5. Regulatory influences shaping hedge fund. Bitcoin strategies. Clarity drives adoption. Regulation is pivotal. Grayscale's outlook forecasts bipartisan market structure legislation in 2026, clarifying asset classifications and enabling on-chain issuance. The Genius Act, per SVB, limits stablecoin issuance to licensed entities, boosting hedge fund confidence. Rescinding SAB 121 removed custody barriers. Expanding, Pantera predicts G7-pegged stablecoins from bank consortia, integrating Bitcoin into payments. This reduces risks, encouraging strategies like tokenized collateral. Controversy. While clarity aids, overregulation could stifle innovation, as critics note in Boston Review's pieces. Point 6. Pros of hedge funds adopting Bitcoin. Diversification and returns. Pros are compelling. Bitcoin diversifies with low stock correlation per Bitwise. Institutional entry stabilizes volatility. Pantera sees 2026 as consolidation year. High returns. Bitcoin's 2023-2024 gains outpaced many assets. Expanding, hedge funds like Elliott use it for macro hedges against inflation. Per Grayscale, advised wealth allocations will grow, enhancing liquidity. Point 7. Cons and risks. Volatility and leverage concerns. Volatility is a major con, 2025's 50% drop per Yahoo Finance. High leverage amplifies losses, as Fed reports note. Counterparty risks in derivatives persist. Expanding, Bloomberg highlights cash pivots post-crash. Privacy issues and hacks deter some. Point 8. Case studies. Successful hedge fund Bitcoin plays. Millennium's 2BN via ETFs exemplifies success. Pantera's funds, per their letter, focus on blockchain for alpha. Expanding, Brevin Howard's crypto strategy, despite 2025 losses, positions for 2026 rebounds. Point 9. Predictions for 2026, institutional boom ahead. Bitwise, Bitcoin new highs, ETFs dominate. Pantera, biggest IPO year, treasury consolidation. Grayscale, ATH in H1, legislation passes. Expanding, SVB sees M&A records, stablecoins to 500 BN. Point 10. Hybrid strategies, balancing risk and reward. A hybrid, 60% ETFs for stability, 40% direct for utility, per expert blends. In wrapping up, hedge funds' Bitcoin strategies signal maturation. For more like, subscribe to Joseph Markets, comment below. Thanks.